What is going on, everybody? Welcome back to another video, and like I said, we are going to go through with how I am managing this account. So this is just an update. I put on a position, so I'm making the video. So with that being said, let's cut that intro and go right into it.
I know I'm fine, but the money
Okay,
makes
guys. So you guys know I talked about a couple of stocks in the last video. If you haven't seen it, basically what I do is I put on positions, and then with the premium that I collect, I buy stocks so I have equity in companies. And that's exactly how I do it. So the one thing you guys know, if you guys are on this, I like selling futures options when the market is great. Now the market has been in a little turmoil and I've lost some money over the past couple of weeks. Now with that being said, because I'm not so sure that the market is just going to continue to climb or anything, I put on what they call insurance or black swan hedges or a hedge. So, and I'm going to show you guys right down here. This is the trade right down here. And I think this is pretty important just to see, because you guys are going to see that I'm already down $10. Now, why am I down $10? Well, that's pretty simple. This right here, again, I draw lines. This is where I entered. This is where it would have to go all the way down to for me to basically get killed, or I'll have to buy that future and then continue start to wheel trade it, which means selling covered calls. I don't really hope for it to get down to there, but you guys understand what I'm saying. If you don't, I have covered call videos everywhere on my channel. Make sure to watch it. But I put on this trade right here. So what did I do? And we're going to actually grab this. It went to my other screen, and I'm just gonna try to make this a little bit bigger here so I can even see it. So what I did, don't know what just happened, but what I did here is I have a single trade where I have sold an option, and you guys can see I am down $12.50 minus one right here. And then I have a vertical. So what I did was I sold a 10 delta, and then I went and did a debit spread, so I paid to put it on. I think I paid like 35 or 40 bucks to put this on with a max profit of like $250 to $300 on here on this one. I don't remember exactly what it was, but this, if the market continues to go down, this will hedge it. So basically, if this thing comes down, but if we stay right in this area that I'm touching right now with this one, let's just put this back here. So if this one stays in this area, I will actually make money on both of them, and that's really kind of that sweet spot. Now, I don't want the market to continue to go down, guys. Like I have said in other videos, I am willing for that hedge to go to zero. My whole $35 or $40, zero, because I pulled in $100 and something in credit from selling the naked put option, which is right here. So I'm perfectly fine with taking that. I do want the market to continue to go up. I also, this week in the same account, I sold a Oxy put, and I already cashed out on it. I did it on the weekly, and I think I made like $15 on it. Nothing big, nothing like that, but it was just one option for it. Now you guys got to remember, and why I did the weeklies on this trade was mainly because I wanted the time to decay fast enough. I was willing to take on the 100 shares at a discount, and I believe I did it at like 65 or 64 dollars on Oxy. But I took a little bit of money, so I actually didn't even close it out to zero. Obviously, I have to wait till Friday. But I took profits on this one. It was down to like 4 cents, so $4. So I basically made $15 on this one, and I moved on. And then I went and bought more shares of PTY, because if we look at PTY is on a massive dip. And yes, when PTY dips like this, I start buying. Now, again, you're not going to get a huge capital appreciation out of this stock. And yes, I understand it's had downtrends. But the biggest thing that we're looking for on this, and I want to go to a monthly chart, for this reason, it just stays in between here. Guys, you guys know I have a lot of it that my average is about $12, and it's about the mid 12s now, I believe. I'd have to go double check on that on my other bigger account. But now I'm building up quite a significant little position here in PTY. And if I look at it here on my monitor tab, PTY, I'm up to 239 shares. Now here's the big difference in this account. I have not bought one share with cash just sitting there. I have a bunch of cash still sitting in this account. It's roughly $14,900 in this account, but I'm only buying shares from the income that I'm producing. That's a big thing with this. And then the other one that I actually put on here, and I'm gonna try to show this to you guys really fast, KO, and you guys are gonna see I'm actually up on this one as well. So yep, you guys can see it right here. I sold an option in KO, and I actually own one stock in Coca-Cola here. Nothing crazy or anything. Again, I've made some premium off of Coca-Cola here, and so I bought a stock. And then I ended up getting the dividend as well. But you guys can see now as well, I have one single option that I have sold. I'm actually up $5.68, basically at a half day. So it works out really well. Again, this is nothing crazy. That's the biggest thing I want you guys to learn from all of this, is I'm not doing anything special. I'm not doing anything crazy. I am just doing the absolute basics, creating income for myself, and then taking it and getting equity out of it. That is my whole strategy. It has been for years. I love it. Now I'm starting to do it on this smaller account. Again, did I take a smaller hit on this account when I basically first started it? Yes, the bonds hurt me because I was too big. I will be the first one to admit it. I was too big, and I risked too much based on the account size. So again, I'm used to having a bigger account. This is a little bit newer to me, adjusting back down to about that $15,000 range. And I really kind of want to act like it's more of like a $10,000 account. And that's why I went and sold the KOs weeklies. Now remember, this thing has not taken off yet today until I went, this is Coca-Cola, I sold the option and then it just skyrocketed afterwards. That's why I'm up the other $5 and something cents. Now, will I be able to go and buy $5 worth of KO? No. But what I'll do is, as soon as I make other premiums off of it, and I believe I am set to collect, like, I don't even remember actually now. Let me pull this up really fast in this video. Make it super simple for you guys. KO, my trade price on one single was 26. So I was able to collect 26. So what does that add up to? I'm going to be able to buy another share of PTY, or maybe I go and find something else. More than likely, what I'm going to do is, if I get all of it, which I probably won't let it go to all of it on KO, but I will get a significant portion of it, at least probably like 75 cents or 75% of the premium collected, and then I'll go buy another share of PTY, because there are no commissions when I'm buying shares. And I think that's a pretty important thing now that TD Ameritrade, Charles Schwab, E-Trade, and I believe all of them have this now. So with that being said, guys, that is the portfolio update. We are technically long on MES with a hedge just in case. And if you want to know what this trade's called, it's literally called a 1-1-1. You're buying a call, selling a call for less to create the debit, and then selling a naked put below 1-1-1. Debit spread and a naked put. That being said, guys, thank you guys all for watching this video, and I can't wait to see you guys in the next one.